Good afternoon, everyone. My name is Keith Whalen from RPI Consultants. I want to thank you for taking the time to attend this webinar on Lawson Asset Management. Once again, we have Chris Gordon, who obviously is the hardest working man at RPI, at least today. He's put together a really nice, clever presentation that talks about asset management in general and dives into some specifics, both for those of you looking to implement this really solid integrated module and those of you looking to get more out of it. And with that, I give you Mr. Chris Gordon.
Thanks, Keith. Thanks, everybody, for joining today. Like Keith mentioned, my name's Chris Gordon. I'm a finance consultant here at RPI. We're going to spend the next hour or so talking about asset management, what it is, what it isn't, talk about leveraging the asset templates and the project accounting module to create assets within your system. We'll also, at the end, have a couple tips and tricks for you, too. So that's where we're headed. Like Keith said, as you guys have questions, pop them into the go-to meeting. We'll have plenty of time throughout the course of the hour. So just a quick about RPI. This is a lot of us, not everyone. And here are most of our finance consultants. So we were founded in 1999. We're based out of Baltimore, Maryland, and we have about 60 consultants all over the country. All right, so what is Lawson Asset Management? It is an integrated Lawson module, just like all the other modules, right? Just like AP integrates to your general ledger, just like PO integrates and supply chain integrates to your general ledger, so does asset management. And we're going to go through and walk through, what's getting flowed from your asset management subsystem to the general ledger, depreciation, additions, transfers, things like that. It performs all of the accounting functions related to asset addition, depreciation, transfers, and disposals. So I don't know how you guys are managing your asset process right now, whether it's in an Excel-based fashion, keeping track of them there, and then sending journal entries to the GL and Lawson after the fact. But the AM system will handle all of that for you, and via some integrated batch jobs, push those journals into the general ledger. All right, so what else can it do? It can generate assets from your subsystems. So not only can you go into your AM system and manually add assets, we can track capital purchases with asset templates, with the project accounting module, and have those transactions feed the AM module to create assets. And we're going to talk about that. That's going to be the bulk of this presentation, is how do we capture these transactions with asset templates, or how do we tag them with activities and bring them into the AM module. What is Lawson, or what is not Lawson Asset Management? It's not an asset tracking system. Okay. There's no RFID codes. You're not scanning codes and maintaining codes like that. You don't manage contracts or maintenance within this S3 application. Again, this is strictly an accounting-based module. All of those no functions can be performed by another Infor application called Enterprise Asset Management. All right, so why do you want to implement AM? One, you might already have it. So, with the financial package, AM is one of those modules that you might have and you just don't know you have it. So, if you do have it, why would you want to implement it? It's nice to move all of that asset-based accounting out of a spreadsheet, if that's how you're doing it now, into Lawson AM. Right, it keeps all of that information contained within Lawson, and makes for easier reconciliation between your AM subsystem to your general ledger, and ultimately just decreases the amount of time that you spend tracking assets, depreciation, disposals, and things like that. What's nice too is that at the end of every month we can run the AM 180, which is a depreciation program, and Lawson will, we're actually going to look at the depreciation calculation, but it's going to apply that formula to your assets and depreciate them accordingly. And all this is kind of part of your AM closing. You can kind of set and forget too, right? You can either add assets manually to your system, release them and let Lawson, churn through those for the whole asset's life. There's not a ton of maintenance that needs to happen unless you're transferring or adjusting assets. So Lawson really, once it's in there, it's there and Lawson's going to take care of it. And what's nice too is the disposals. So there's an AM40 disposal form that will automatically generate the disposal entries when you go to retire or sell or abandon an asset. All right, so what we want to do is kind of walk through the basics real quick. We want to look at, if I'm in the AM module right now, how do I create an asset? And that all starts with AM 20.2. Right, there's a couple different forms you need to go to tell Lawson, some information about my asset. Starting with 20.2, we're going to let Lawson create a number for us, an asset number, but we're going to give it a description, tell it what company is this assigned to, if there's a location, in this case, we have this PC server system located in our corporate office. We define all of the, if there's a division, what type of asset this is. In this case, this is equipment. But you have equipment, major movable, fixed equipment, leasehold improvements. So there's a slew of different asset types you can have out there, but here's where you're tagging that specific type to the asset. We're also defining account groups and accounting unit groups for depreciation purposes, as well as some other gain and loss and proceeds. Those types of accounts are set up in your account group. So we hit add on 20.2 and the system's going to take us automatically to 20.3, and what we're going to be doing here is adding the item store asset. So in this case we have a server system that consists of one CPU, one monitor, and one CPU, one monitor, and two printers, for a total cost of $8,000 for this asset. Okay, so you want to break out your assets individually in this level of detail, because if you needed to dispose of specific items within this asset, you have the ability to do that, right? If this was just one PC server system and you combined all of this detail into one line, and a year from now you needed to partially dispose of a printer or something like that, it's hard to do that. You can do it, but it's easier if you start off like this rather than having to go back and retroactively change the items on that asset. So kind of in keeping with that example, let's say we did need to dispose of a specific part of this asset or a specific piece, but we had this item or this asset coded to just one item. So we had quantity one of $8,000. What you could eventually do is break out that one line to multiple lines and divide that cost by the amount of lines that you're breaking that asset out to. So then you keep the $8,000 total cost, you break out your quantities by however you need to, and then you're allowed to, that allows you to be able to dispose of a specific item within that asset. All right, so it's also nice we can code serial numbers and model numbers, barcodes and things like that on our items and keep track of them that way. All right, so we click add off of AM 20.3. It takes us to AM 20.4, where we're defining the books, the method of depreciation, the convention of depreciation, the total life of this asset, and the total cost basis. Okay, so this is, again, all stuff you're doing manually if you're going in one at a time and adding this information. All right, we talked about depreciation a little bit. AM 180 is going to be the job that calculates depreciation every single month for your assets. You can't close your AM period unless you run AM 180. But let's take a look at exactly what AM 180 is doing. So step one, it's going to compute the annual depreciation for your asset. All right, then step 2, it's going to prorate and apply the convention for a first year asset, and that's going to give you your first year depreciation. To get the remaining amount to depreciate for that year, we're going to subtract the existing year-to-date depreciation from the annual depreciation. And then to get the amount that should be reported on the AM 180 for that period, you're going to take that remaining amount from step 3 and divide it by the amount of open periods left in the year. So that's what's happening during an AM 180 run. That's how Lawson is determining what to book for depreciation each month. And this is also the reason, or it could be the reason why when you convert assets into Lawson, the depreciations don't match up 100%. Could be the reason. So the way that you might be calculating depreciation outside of Lawson is a little bit different than this. Therefore, you might get some discrepancies. So it is a lot going on here, and you probably just run AM 180 without even knowing what's actually happening. So this is a nice slide to just kind of take a step back and see, all right, so how am I getting this final number? How am I getting the depreciation amount for this month? All right, so transfers. Transfers and adjustments kind of go hand in hand. There is a difference though. So transfers are anything, you can kind of think of transfers as physically moving an asset, right? So if you're changing companies, if you're changing locations or divisions, you're going to be using the transfer programs. If you're doing anything else, adjusting anything else on the asset, you'll be using the adjustments. So if you're changing books or asset types or anything like that, or not location, anything other than location, division, and company, adjustments is your way to go. And there is a mass adjustment program, a mass transfer program. You don't have to do this manually. You can select, I think it's AM 35, you can do mass transfers, and then AM 135 is the update program to run to enforce or to make those changes. Okay, disposals. So like we said before, Lawson's going to calculate on AM 40 when you go to dispose of an asset, it's going to calculate or create those journal entries that need to happen. So it's going to register a gain loss on an accounting unit, and an account category is more or less like an account. The AC module just allows you to break out into much more detail your general ledger. But this is nice for our Q04 to kind of limit what requesters can touch what type of projects. All right, so a little bit of accounting, just to give you an idea how this flows from, say, an invoice all the way into your asset management system. So accounting from AP to AC as kind of the in-between, and then to AM. We're going to have an invoice coded to our work in process account. So when we release that invoice and post it with AP 175, we're going to debit our WIP account and credit our AP liability account. When we finally pay the invoice, we're going to clear out our AP liability, and we're going to credit cash for 10,000 bucks in this case. Right, so AP 175 will actually send an invoice coded with an activity account category combination to the AC module. So that's one of the biggest things, right? You have a PO, you have a rec, you have an invoice. There's a field, or two fields really, where you need to populate, okay, what's my activity? What project am I hitting? And then what account category am I hitting to? What type of cost is this? So 175 will send that to AC. 170 clears out your AP and credits cash. AC 160 is going to be the job that will run to credit out your WIP account and debit your asset clearing account. Because what's going to happen next is AM 170 is going to credit your asset clearing account, hit your asset account for whatever type of asset you've put, whatever type of account that is there. And ultimately you're left with an asset, we've debited our asset account, and we've paid for that asset. Okay? So that's kind of the front to back of from AP to AC to AM, what's happening. The key is obviously at the beginning coding that account, that WIP account on your invoice. All right, so the AC 160 program, we've talked a little bit about it, but here it is. This is the job that will capture all the costs that have been hitting your activities and account categories, grab them, and throw them into your asset management system. All right, so we can run this here by an activity group list. If you have specific activity groups that you want to capture, you can do it for one specific activity group, a couple activities, or an activity list. So a lot of options there to pick. Our second options tab here is saying, all right, do we want to put in an account category that we're grabbing? And I'm going to say yes because I've coded my invoices to this land improvements account category. But you're not limited to one here, right? So if you were trying to capitalize a lot of or multiple account categories, you can create your own group. That would look like that. So we can go out to ACO 5.2, create our own account category groups, and not only will we have land improvements, we could bring in a couple others too. But let's go back to this for a second, because what's really nice about the AC 160 is the post to AC flag, which is going to allow us to capture what we're about to capitalize. And it's going to post that amount back to the activity. So in the future, when we run reports and things like that, we can see what we've already capitalized. So we have $1 million CIP project. We're bringing over $250,000 worth of capital to create an asset. We'll send a credit back to this Cap D account category. So when we run reports and things like that, we'll be able to see that there's $750,000 left of that project that's not been capitalized. And she's here. All right, so before I run AC 160, what needs to happen? Right, I can't just have all these costs coming into my project accounting module and then just say, all right, I'm going to run the AC 160 and everything that I need to flow into AM is going to flow. I need to, step one, post all of my transactions with AC 190. Okay, just like GL 190 posts all your journal entries, AC 190 is going to post all those entries that AP 175 has brought over. Step two is change the activity status to allow capitalizing. All right, so on each activity, when you set it up, there's a status field here, and this status is dictating what you can do or what is allowed for this activity. So typically, when you're posting, if this is a year-long project, you have a status of open, and you're continuously posting to that activity. When you want to capitalize part of that activity or all of it, you would change it to a status that indicates capitalization. And I just did a little define on that status field to say, hey, here are the different statuses that we've defined, and this is what each status is letting us do. Right? So if we only have a CA status, we can only capitalize. If we have a closed status, we got nothing, right? So we're not allowed to capitalize. We can't post to. So once you're done with an activity, it's nice to throw that closed status on there so nothing can post to it anymore and things like that. All right, step three, we need to ensure that the account category allows capitalizing. All right, so we have our activities are open, allow for capitalization. We also got to make sure that our account categories allow for capitalization too. So that's off of ACO 6, inquire on your activity. make sure the cap flag says yes for whatever you're trying to capitalize. Step 4, we have the asset templates. They do come back into play within AC. Right, we've got these transactions into AC because we've tagged activities to the purchase order or the invoice, but now we're using the template to transfer that AC information into relevant asset management information. So those same templates that we talked about before, we're now going to throw onto an AC 10.3. So in this case, we're using this one activity. All of the costs under the land improvements account category I want to capitalize. And I'm giving it this land improvement template, which is defaulting specific information onto that record. So when it gets to AM, it's going to know how to act and how to work. Wrong button. All right, so the last thing on AC 10.3, again, this is the same place we just saw the templates. You need to come over to your transaction, and you're entering your asset clearing code and your WIP code. So if you think back to the accounting that we saw a couple slides before, these codes are actually those accounts, right? So when you run AC 160, we're debiting our asset clearing account and crediting back our work in progress account. All right, so AC 160 just runs, right? It takes everything that we wanted to capitalize, which ended up being about $120,000. Right, our land improvement account category. There's also some miscellaneous costs out here to building, but we run AC 160. We capitalize 120, and if you remember back a couple slides ago, we had the credit back to AC. And that's what this negative 120 is doing here, is it's telling us for this capitalized account category, post back that credit. So we know that we've already taken out 120 from this activity, and we only have 95 left to capitalize in the future. Okay? And this type of account category is an accrual account category. It's not a cost type. So if you're worried about, like, hey, this is going to screw up some of my reports, whether they're Crystal reports or Lawson inquiries or reports, you can always filter out and say, don't worry about accrual account types, and then you wouldn't even see this negative 120 on any of your reports. Okay, so a couple tips and tricks. We saw this before, right? So requesters, their job isn't necessarily to know the asset life or the asset type for an asset or a capital purchase. Their job is, well, they want something, right? So we instruct them to use a generic template, which is going to flow through the whole, rec to PO to AP to AM, in which case your asset accountant can go back and reclassify that asset when it gets to him or her. Choose your route. There's nothing stopping you from using AC and AP to capitalize. So if you did want to use templates from AP as well as interface from AC with AC 160, you can totally do that, but we kind of recommend against that. It just stays a little bit cleaner if you pick one way versus the other. And there is no right way. It's just whatever's most comfortable. You kind of have to figure out, do I want to have a capital structure in AC and spend the time to implement AC, or do I want to just set up a few templates and teach my requesters and AP clerks how to use those templates. The credit back to AC, we've talked about this plenty of times, right? So it's a nice way of knowing what's left to capitalize on an activity. And create smart asset templates. So you saw that spreadsheet that we had earlier. You want to give a little bit of thought into what you're creating. You don't want 100,000 templates out there and use only 5, but you don't want 5 and need 20, right? So you need to kind of think, what are my asset types? How do I want to differentiate templates? So I want to do it by company if I'm a multi-company setup. Do I want to do it by books? If I have different books, I can have different templates for those books. So it's a case-by-case basis, and there's no right or wrong way of creating these. It's just there's a right or wrong way for you to create one, right? They're based off of the way you do business. There's probably a good way of setting those up. Something we've not talked about yet, but your AM260. This is your asset report. And what I'm trying to point out here is the fact that you can run this in preliminary close. So that's what that flag over here is saying. So if you run AM180 and calculate depreciation for the month for your assets, and you don't want to close yet, you want to see what's my plant ledger going to look like, you can come to AM260 before you close, set this flag to yes, submit the job, and you'll see all of your assets with that updated depreciation that AM180 just posted. And then you would, if everything's okay, you'd close the period. Also on AM260, to make for easy reconciliation between your general ledger and your AM subledger, you can tie out your AM260 report by asset. And it's going to give you, if you do have a one-to-one relationship between your asset accounts in your general ledger and your asset types in AM, it's going to give you an easy way of saying, all right, here's my balance for land equipment, or sorry, for equipment, and I can tie that easily back to my general ledger.
So we got a good question here. Can you talk about how an AP unmatched, by which I'll interpret reverse match, would flow through to AM? So I think what that question really comes down to is when you process the invoice, at which point is it populated under the asset template in AM?
Yeah, so it's going to throw it into AM as soon as it matches.
Okay.
But I do not know if you run MA 70 or 75 if it backs it out.
Okay, so something we can try would be awesome.
We can totally, we should test that. Yeah, you would hope that it would back that out, but I'm just not sure if that code's written
Hopefully
into MA 70.
Doesn't break the space-time continuum and
hopefully not.
Throw us into some infinite loop. But
It'd be devastating.
it's the kind of thing where Lawson does a lot of iterations, but you can get to things that they haven't really
fleshed out,
built in, and it might be something where my guess is it doesn't take it back and leaves it in there. I got a second question for you. Mm-hmm. So, we talked about capitalizing assets through AC, which is super cool and super best practice and highly recommended. What if I'm already using AC for like some other stuff?
And you want to use...
And I want to start capitalizing.
Yeah, so you can do one of two things. You can re-engineer your current design to take into account how you want to capitalize, or you can build out a whole new activity group and start capturing costs, with those new activities. There's no disruption to your current setup, I guess, is the main point, right?
Right, so that it can be like mutually exclusive sets.
Totally.
For whatever you've been tracking, whatever you want to use to capitalize.
Totally, because we saw the 160. There's so many ways you can run that. At the activity group level, which obviously takes into account all of the activities that sit underneath it, or you can run it just at the activity level. You can pick and choose different activities you want to run it for, so there wouldn't really be a disruption to your current setup.
So the one thing we did learn when Cindy Brackens was walking through the activities presentation is that the activity sits at a higher level than the group in terms of an indexing field. So we can't repeat activities across different activity groups. So that's the only thing to consider is you want to be smart about how you name and number.
Yeah, regardless of what activity group that activity falls under,
it's
you
unique.
can't have repetitive names. They all, within the entire system, you got to have unique names for that activity. Okay, so that's pretty much it for AC to AM. This is just a slide here. Follow us on Facebook and Twitter and Instagram, YouTube, LinkedIn, and Digital Concourse. The webinars throughout the whole day are going to be posted and tweeted and Instagrammed and LinkedIn throughout the next few weeks or so. I don't know. I'm not sure we're there yet. It's linked. And last but not least, Inform is coming up in July, and on June 23rd, we have one of the partners here, Richard Stout, giving a dummies guide to New York City for anyone who's not been there and is excited to see what New York City is all about. So he used to live there, he lives in Florida now, and I'm sure he's very excited to do this. All right, so any questions other than the ones that we've received? We'll take a couple minutes to field any if there are, while we watch the game.
Yeah, we'll give them a minute before we start closing up here. Are you going to Inform, Chris?
I will be at Inform. I will. I'll be going up on Sunday, coming back Wednesday.
You know, it's real impressive that Chris is going to Inform. He's actually getting married the weekend after Inform.
Yeah, I'll be.
Congratulations. I hope that everybody knows that we're not making this announcement for the first time.
Hopefully she knows.
So yeah, there you go. But yeah, he'll be available, and we'll have a lot of our consultants there, so please do stop by. And we're happy to schedule one-on-one time and take advantage.
For sure.
We got a question. All right. Is there any way to change a non-depreciable asset to depreciable?
Yes, you can. So there's on AM 20.2, you can go back and adjust that. It's either 20.2 or 20.4. One of those screens you can go back and there's a flag that says depreciable, and you can switch that.
Wow, learn something new every day. Okay, well, I think that's all we got for today. If you have any other questions after, feel free to email us. Once again, we will be recording this webinar. We will be posting it. We will be sharing it. We'll also be sending out a brief survey. If you can please take 5 minutes and fill it out. It helps us get feedback to understand how to do these better. And obviously, we do these so that we can be a contributor to the Lawson community. Very much appreciate your time. Very much appreciate all your hard work today, Mr. Chris Gordon.
Thanks, guys.
And we'll see you soon.